Did you know that the majority of ordinary investors would eventually find Tesla stock to be too costly? That's according to celebrity investor Cathie Wood. During the decline, large companies such as Woods Ark Invest have started purchasing Tesla shares. Don't miss this one. You would want to take Wood's advice to heart. The share price of Tesla is currently $191.30. More ordinary investors can now invest in EVs thanks to this pricing point, but experts, including Cathie Wood, think that Tesla stock will continue to rise for a very long time. A number of actively managed exchange-traded funds are managed by the American investment management company ARK Invest. Investors looking for long-term development in the public markets might find investment solutions from ARK Invest, which only focuses on disruptive innovation. The business is watching Tesla since it also makes investments in cutting-edge fields like genomics and self-driving automobiles. The company managed $50 billion in assets as of February 2021. Cathie Wood, the chief investment officer and CEO of ARK Invest, is an American investor who has been dubbed the most underappreciated investor in the industry by Forbes. She is a star stock picker. She not only has the evidence to support her remarkably astute claims, but she also makes very compelling investing reasons. ARK Invest purchased Tesla shares twice in October alone. First, following the company's release of Q3 production and delivery figures in early October, and then following the company's Q3 results call in mid-October. Wood bought 132,000 Tesla shares at the beginning of October. After the company disclosed a delivery error, Wood purchased an additional 66,190 Tesla shares in October after the company released its delivery and production figures through a press release for the second time. This was done after the stock dropped in response to Tesla's Q3 earnings. When the price dips, it seems that Wood and her company ARK Invest are buying frenzy. This is presumably due to Wood's belief that Tesla's stock would fly to unprecedented heights in the coming years. Thus, she is seizing the opportunity to purchase further stock at a discount. ARK has projected a value per share of $3,000 in 2025 in its open source Tesla model for 2021. Since then, though, they have modified this in light of significant modifications such as estimations of capital efficiency, assumptions, and inputs related to autonomous ride-hailing, and a one-year advance in the prediction to 2026. As to ARK's analysis, the potential robotaxi business line of Tesla is a significant contributor, accounting for 60 of the projected value and over 50 of the anticipated EBITDA profits before interest, taxes, depreciation, and amortization in 2026 throughout the simulation set. Although at much lower margins than the earnings from the robot taxis, they anticipate that in 2026, electric vehicles will account for 57 of the company's total revenue. As a result of ARK's growing confidence in Tesla's potential to accomplish fully autonomous driving, they have revised the way the robo-taxi industry fits into the model, despite their earlier predictions that Tesla would never be able to introduce autonomous ride-hailing. They have since changed their minds in response to recent encouraging developments from the company and now project that it will come in 2026, 4 years later than Musk had anticipated. Additionally, they predict that in 2024, Tesla will provide autonomous ride-hailing services, but in 9 of their model situations, Tesla fails to bring robo-taxis to market in the allotted 5 years. The projected financial results for Tesla are sensitive to the year of launch if and only if robotaxi commercializes within the projection window. Additionally, Tesla's capital efficiency is increased by ARK Invest's upgraded model. When the Model 3 was ramping up in 2017, Tesla's capital investment per incremental unit of capacity was $84,000. By the time the 2017 model was released, that number was closer to $7,700. According to their estimates, Tesla will invest between $6,000 and $8,000 for each additional unit of capacity by 2025. Given its significantly higher capital efficiency than anticipated, it's probably realistic to project that Tesla will invest between $2,000 and $7,000 for each additional unit of capacity by 2026. In 2026, ARK projects that Tesla's share price will reach $4,600. According to the most recent model revisions, Tesla's 2026 market value may be between $2,958 and $5,800 per share, depending on the bull and bear scenarios. If this occurs, only institutional investors will be able to purchase Tesla shares, making it unaffordable for the average American Institutional investors invest other people's money on their behalf rather than using their own. Conversely, retail investors make their own investments, frequently through retirement or brokerage accounts. The ARK Invest team also mentioned their expectation that by 2026, Tesla's robotaxi will revolutionize the industry for the corporation. The expected value, assuming Tesla launches robotaxis successfully, is the mean of the 1 million scenarios run. The year that Tesla eventually introduces robotic taxis will have a significant impact on simulations. Tesla launches a vertically integrated human-driven ride-hailing service, but does not launch a robotaxi network in the majority of ARK's lowest price per share scenarios. In other situations, Tesla does not deploy either service. Although the business hasn't made a formal commitment to start offering human-driven ride-hailing, ARK has already discussed the tactical and strategic benefits of doing so. Crucially, ride-hailing services operated by humans have the potential to generate a healthy, steady income stream prior to Tesla introducing a fully autonomous service. ARK makes the assumption that Tesla's human-driven ride-hailing vehicles will eventually make the switch to the autonomous ride-hailing network in the event that the company introduces a human-driven ride-hailing service and solves for completely autonomous driving. Tesla may introduce a ride-hailing car that is operated by a human as it works toward complete autonomy, even if it is unable to introduce a robot taxi service in the allotted 5 years. Conversely, in the numerous price per share possibilities presented by ARK, Tesla introduces a robo-taxi network within the next 2 to 3 years. According to a published article, ARK Invest feels that their Tesla model is methodologically cautious, even if it is adjusted to our expectation for 2026. In 2026, we predict that Tesla stock will behave more like that of an established business than a fast-growing one. Wood's reputation as a Tesla bull has never changed. Before making an investment in the company's stocks or bonds, investment firms like ARK Invest gave them considerable thought. Additionally taken into account are the stock market and economy. Investors, analysts are keeping a close eye on Tesla shares like Wood. Tesla prices have been bouncing a lot, but investors are still yearning to purchase Tesla stock because they believe the firm has a lot of potential for the future. Many people think Tesla will accomplish amazing things in the future. Given this, a lot of investors believe Tesla has enormous potential, especially considering that it was the first to successfully launch electric cars into the market. ARK Invest thinks Tesla will stay at the top of the electric car market, particularly if it's the first company in the US to successfully implement autonomous driving. According to Cathie Wood, we're beginning to believe that not only will Tesla take the biggest share of the electric vehicle market, we also believe that it could take 20 to 25% share of the total auto market in 5 years. That's by 2026. According to VW Group, which claims Tesla is the industry standard in that area, Tesla's manufacturing process is also the envy of its biggest rivals. A more productive method of production results in reduced cost and more profit. And as of right now, Tesla has the best gross profit margin of any automaker. In the most recent third quarter of 2022, it was 27.9%. Additionally, Tesla is a pioneer in the field of self-driving software technology, which is expected to generate over $2.01 trillion in revenue by 2030, according to some projections. The business may regain the lead on that possibility with the launch of its fully autonomous robotaxi scheduled for 2024. Other automakers may need to wait a lot longer to develop this technology since it needs years worth of real-world data. Then there are Tesla's other ventures, such as the production and storage of solar panels for homes, which are in such great demand that the company is finding it difficult to meet demand. Optimus, new humanoid robot that Tesla unveiled at this year's I-Day, has the potential to completely transform the workforce. Additionally, there's the robotaxi industry, which has the potential to completely transform mobility. It is anticipated that Tesla's model will not require any human intervention at all, which has the potential to completely transform the logistics industry and redefine how humans move about. Experts estimate that Tesla will likely produce cars at a run rate of 2 million per year. And Wall Street analysts project the EV company will make roughly $120 billion in sales in 2023. So if that production figure rises tenfold, Tesla's annual revenue could exceed $1 trillion by 2030, assuming vehicle prices remain consistent with today's levels. If this happens, Tesla stock will inevitably soar high enough that most retail investors will no longer be able to afford to buy a share of the leading EV company. Tesla stock is one of the top ARK Invest stocks with a whopping 10.8% weighting in the ARK F portfolio as of late October 2022. Make sure to subscribe to this channel for more Tesla stock updates after this.